Welcome to Topical Economics. If you're new here, don't forget to subscribe and hit the bell icon so you never miss any of our insightful videos on key economic concepts. In today's video, we're diving into the topic of microeconomics and macroeconomics. I'll be walking you through some past paper multiple-choice questions, carefully analyzing each one to explain why the correct answer is what it is. Whether you're preparing for exams or just want to strengthen your understanding of economics, this video will help you get to grip with important concepts in a clear and practical way. So, let's get started. Starting with the first question. Which relationship would be studied by an economist specializing in macroeconomics? A. The relationship between the inflation rate and the unemployment rate. B. The relationship between the output of a firm and its costs of production. C. The relationship between the price of a product and the quantity demanded by a consumer. D. The relationship between the wage rate of workers and demand for labor in an occupation. This question is from year 2022 May-June version 2. The correct answer for this question is option A. An economist specializing in macroeconomics studies the behavior of the economy as a whole, including aggregate measures such as GDP, inflation, unemployment, and national income. Therefore, the correct answer is A. The relationship between the inflation rate and the unemployment rate. This relationship is central to macroeconomics and is commonly explored using the Phillips curve, which shows the inverse relationship between inflation and unemployment in the short run. Moving to the second question. Which topic is studied in macroeconomics? A. Cost-push inflation. B. Market price determination. C. Public goods. D. The output of a firm. This question is from year 2022 May-June version 3. The correct answer for this question is option A. Cost-push inflation. Cost-push inflation is a key topic in macroeconomics, as it involves factors that affect the overall price level in the economy, such as increases in production costs, e.g., wages or raw materials. Macroeconomics focuses on understanding inflation, unemployment, national income, and other aggregate economic factors. The other options are more aligned with microeconomics. Option B, market price determination, focuses on how prices are determined in individual markets, which is a microeconomic concept. Next, option C, public goods, also pertains to microeconomics, as it deals with the provision and consumption of goods that are non-excludable and non-rivalrous. Lastly, option D, the output of a firm, is studied in microeconomics, focusing on the production decisions of individual firms. Moving to the third question. What is a macroeconomic concept? A. The effect of a price change of a good. B. The equilibrium price in the market for a good. C. The reason for a change in a firm's behavior. D. The total spending in an economy. This question is from year 2021 October-November version 1. The correct answer for this question is option D. The total spending in an economy. This is a macroeconomic concept because it refers to aggregate demand, which represents the total spending in an economy. It includes consumption, investment, government spending, and net exports, exports minus imports. Macroeconomics studies broad economic factors like national income, inflation, and overall spending within a country. The other options are related to microeconomics. Option A, the effect of a price change of a good, looks at how price changes affect the demand or supply for a specific good, which is a microeconomic topic. Next, option B, the equilibrium price in the market for a good, focuses on the price at which the quantity demanded equals the quantity supplied in an individual market. Lastly, option C, the reason for a change in a firm's behavior, is a microeconomic concern, looking at individual firms and their responses to changes in conditions such as prices or costs. Moving to the fourth question. What is a microeconomic decision? A. A central bank reducing interest rates. B. A gas firm reducing its prices. C. A government increasing income tax. D. A government increasing the national minimum wage. This question is from year 2021 October-November version 3. The correct answer for this question is option B. A gas firm reducing its prices. This is a microeconomic decision because it concerns the actions of a specific firm in the market. Microeconomics focuses on the behavior of individual firms, consumers, and industries, including pricing decisions, supply and demand in individual markets, and how firms respond to changes in their environment. The other options are related to macroeconomic decisions. Option A. A central bank reducing interest rates affects the broader economy and is typically studied under macroeconomics. Next, Option C. A government increasing income tax impacts national tax policy and is a macroeconomic issue. Lastly, Option D. A government increasing the national minimum wage also impacts the economy at a national level and is a macroeconomic issue. Moving to the fifth question. What is not included in microeconomics? A. Economies of scale. B. Forms of competition. C. Individual demand. D. The inflation rate. This question is from year 2021 May-June version 2. The correct answer for this question is option D. The inflation rate. The inflation rate is a macroeconomic concept, as it refers to the overall increase in the price level of goods and services in an economy over time. Macroeconomics deals with aggregate measures such as national income, unemployment, inflation, and the overall price level, which affects the entire economy. The other options are all related to microeconomics. Option A. Economies of scale refers to the cost advantages that firms experience when they increase production, a concept studied in microeconomics. Next, Option B. Forms of competition refers to different market structures, e.g., perfect competition, monopoly, oligopoly, which are key areas of microeconomics. Lastly, Option C. Individual demand focuses on how consumers decide what to purchase at different price levels, which is also a microeconomic topic. Moving to question 6. What is included in microeconomics? A. The calculation of national income and expenditure. B. The effects of a change in exchange rates on the trade balance of an economy. C. The effects of an increase in the price of a good or service. D. The factors leading to demand pull inflation. This question is from year 2021 May-June version 1. The correct answer for this question is option C. The effects of an increase in the price of a good or service. This is a microeconomic topic because it focuses on how price changes affect individual markets, the behavior of consumers, and the supply and demand for a specific good or service. Microeconomics deals with the decision-making of individual households, firms, and industries. The other options are more aligned with macroeconomics. Option A. The calculation of national income and expenditure is a macroeconomic concept related to measuring the overall economic activity of a country. Next, Option B. The effects of a change in exchange rates on the trade balance of an economy relates to international economics and the overall economy, which is a macroeconomic issue. Lastly, Option D. The factors leading to demand pull inflation refers to the overall price level in an economy and the factors driving inflation, which is also a macroeconomic topic. Moving to question 7. Who is a microeconomic decision maker? A. The director of an international trade organization. B. The entrepreneur of a firm. C. The finance minister of a government. D. The governor of a central bank. This question is from year 2021 May-June version 3. The correct answer for this question is option B. The entrepreneur of a firm. An entrepreneur of a firm is a microeconomic decision maker because microeconomics focuses on the decisions made by individual firms, consumers, and industries. The entrepreneur makes decisions about production, pricing, investment, and the management of resources within the firm, all of which fall under microeconomic analysis. The other options are related to macroeconomic decision makers. Option A. The director of an international trade organization is involved in international trade policies, which affect national economies, macroeconomics. Next, Option C. The finance minister of a government deals with fiscal policy, taxation, and government spending, which are macroeconomic topics. Lastly, Option D. The governor of a central bank is responsible for monetary policy, including interest rates and inflation, which are part of macroeconomics. Moving to question 8. What is included in macroeconomics? A. The causes of a change in the price of one product. B. The causes of a market failure. C. The causes of determinants of price elasticities of supply. D. The causes of economic growth. This question is from year 2021, February-March version 2. The correct answer for this question is option D. The causes of economic growth. Macroeconomics studies the performance, structure, and behavior of the entire economy. One of its key areas is understanding the causes and factors that contribute to economic growth, which refers to the increase in a country's output over time, usually measured by changes in its gross domestic product, GDP. The other options are related to microeconomics, which focuses on individual markets, firms, and consumer behavior. Option A. The causes of a change in the price of one product is a microeconomic topic that deals with how supply and demand affect the price of a specific good. Next, option B. The causes of market failure involves individual markets not functioning efficiently, which is also a microeconomic concern. Lastly, option C. The causes of determinants of price elasticities of supply relates to how supply responsiveness changes with price changes, a microeconomic issue. Moving to question 9. Which person makes macroeconomic decisions? A. A bank manager. B. A government finance minister. C. A shareholder in a firm. D. A worker. This question is from year 2020 October-November version 1. The correct answer for this question is option B. A government finance minister. A government finance minister is responsible for macroeconomic decisions because they manage national economic policies, including fiscal policy, government spending and taxation. These decisions impact the entire economy, such as influencing national income, inflation, and unemployment levels. The other options are more concerned with microeconomic decisions. Option A. A bank manager manages the operations of a specific bank, which is a microeconomic concern. Next, option C. A shareholder in a firm is concerned with the performance of a particular company, which is also a microeconomic issue. Lastly, option D. A worker is involved in decisions about their individual labor and employment, which is a microeconomic concern. Proceeding with the 10th question. What is an example of a macroeconomic aim? A. To create and maintain full employment. B. To improve efficiency in the manufacturing sector of the economy. C. To provide consumers with greater information when buying goods and services. D. To encourage greater occupational mobility of labor. This question is from year 2020 October-November version 2. The correct answer for this question is option A. To create and maintain full employment. This is a macroeconomic aim because it focuses on the overall economy. Full employment is a key objective for policymakers, as it refers to the condition where nearly everyone who is willing and able to work can find employment. Achieving full employment is central to macroeconomics, which studies broad economic factors like national income, inflation, and unemployment. The other options are more related to microeconomics. Option B. To improve efficiency in the manufacturing sector of the economy focuses on individual sectors and firms, which is a microeconomic goal. Next, option C. To provide consumers with greater information when buying goods and services is related to consumer behavior in individual markets, a microeconomic issue. Lastly, option D. To encourage greater occupational mobility of labor can be important from a macroeconomic perspective, but it is more often considered as part of labor market efficiency, which ties into both macroeconomic and microeconomic policies. Proceeding with question 11. Economics is divided into two, microeconomics and macroeconomics. Statement 1. When the price of oil falls, there is an expansion in demand. Statement 2. The Organization of the Petroleum Exporting Countries, OPEC, can influence the price of oil. Which combination correctly describes these two statements? This question is from year 2020 October-November version 3. The correct answer for this question is option D. Statement 1. When the price of oil falls, there is an expansion in demand. is a microeconomic statement because it focuses on the demand for a specific good, oil, in the market, which is a typical topic of microeconomics. The relationship between price and demand for a particular product is a key concept in microeconomics. Statement 2, the Organization of the Petroleum Exporting Countries, OPEC, can influence the price of oil, is a macroeconomic statement because it involves OPEC, a major international organization, and its influence on the global economy's oil prices, which affects countries' economies, inflation rates, and overall economic performance. This is a macroeconomic issue as it impacts the broader economy. Moving to question 12. Which topic is included in microeconomics? A. Economic growth. B. Elasticity of demand. C. Inflation. D. The balance of payments. This question is from year 2020 May-June version 1. The correct answer for this question is option B. Elasticity of demand. Elasticity of demand is a microeconomic concept because it deals with how the quantity demanded of a good or service responds to changes in price. It is concerned with the behavior of individual consumers and how they react to price changes in specific markets. The other options are related to macroeconomics. Option A. Economic growth focuses on the overall increase in a nation's output, a key macroeconomic issue. Next, option C. Inflation refers to the general rise in prices across the economy, which is also a macroeconomic topic. Lastly, option D. The balance of payments is a macroeconomic concept that tracks the flow of goods, services, and capital between a country and the rest of the world. Moving to the 13th question. Microeconomics analyses choices in various situations. Which area of economic study does it not include? A. Costs and revenues of a firm. B. Individual consumer behavior. C. Policies for economic growth. D. Wages for different occupations. This question is from year 2020 May-June version 2. The correct answer for this question is option C. Policies for economic growth. Microeconomics focuses on the behavior of individual consumers, firms, and industries within the economy. It analyzes how they make decisions about resources, production, pricing, and consumption. It typically does not deal with broad national policies like those aimed at economic growth, which is a macroeconomic topic. The other options are part of microeconomics, because option A. Costs and revenues of a firm. Microeconomics studies how firms make decisions about their production costs, pricing, and revenue generation. Next, option B. Individual consumer behavior. Microeconomics looks at how individual consumers make purchasing decisions based on their preferences, income, and the prices of goods and services. Lastly, option D. Wages for different occupations, is related to the microeconomic study of labor markets, where wages are determined by the supply and demand for labor in specific occupations. Moving to question number 14. Which are both macroeconomic decisions? This question is from year 2020 May-June version 3. The correct answer for this question is option B. Let us look at both decisions 1 and 2 separately and analyze whether the decision is macroeconomic or microeconomic. First, decision 1. Option A. A school recruits more teachers, is a microeconomic decision because it concerns an individual school, a specific entity, making a choice about its staffing. Next, option B. A central bank reduces money supply, is a macroeconomic decision. The central bank's actions affect the broader economy, such as inflation, interest rates, and economic growth. Next, option C. A government increases tax rates, is a macroeconomic decision. Changes in tax rates are part of fiscal policy, which impacts the entire economy, including government revenue and national economic performance. And option D. A household cuts its energy use, is a microeconomic decision, as it involves the behavior of an individual household. So, B and C are macroeconomic decisions for decision 1. Now, we see decision 2. Option A. A firm sets the prices for its products, is a microeconomic decision. It involves the pricing strategy of a specific firm. Next, option B. A government spends more on defense, is a macroeconomic decision. Government spending on defense is part of national fiscal policy and affects national economic activity. Next, option C, a farmer decides which crops to grow, is a microeconomic decision, as it concerns the choices made by an individual producer, the farmer. Lastly, option D, a worker accepts an offer of overtime. This is a microeconomic decision, as it relates to an individual's decision about labor and income. Therefore, we can conclude that B, a central bank reduces money supply, and B, a government spends more on defense are both macroeconomic decisions. Moving to question 15. A country experiences a long strike by railway workers. What would be the macroeconomic impact of such a strike? A. National output would fall. B. Railway workers would lose income. C. The demand for taxi services would rise. D. The profits of railway operators would fall. This question is from year 2020 February-March version 2. The correct answer for this question is option A. National output would fall. A long strike by railway workers would disrupt the transportation of goods and passengers, which could have significant effects on the broader economy. Since the railways are a key component of transportation infrastructure, their disruption would likely lead to decreased productivity in industries that rely on rail for shipping goods, leading to a fall in national output, gross domestic product, or GDP. This is a macroeconomic impact, as it affects the overall economy. The other options are more microeconomic in nature. Option B, railway workers would lose income, is a direct effect on the individual workers involved, which is a microeconomic issue. Next, option C. The demand for taxi services would rise, is a reaction within a specific market, the taxi market, which is a microeconomic concern. Lastly, option D. The profits of railway operators would fall, is an effect on a specific firm or industry, which is again a microeconomic issue. Thank you for watching this video on microeconomics and macroeconomics multiple choice questions. I hope the explanations of past paper questions and the reasoning behind the correct answers helped clarify some key concepts. If you found this video useful, please don't forget to like, comment, and subscribe to Topical Economics for more insightful lessons and exam tips. Your support is truly appreciated, and it encourages me to keep creating valuable content to help you succeed. Feel free to leave any questions in the comments, and I'll be happy to assist. Thanks again for being a part of the Topical Economics community.